too many traders get so involved with things like MACD and RSI and stochastics and all of these scanners and these odd things that they stop looking at what price is trying to tell them. And ultimately, price is the only thing that is always correct. It never lies to you. So you should always be paying attention to what your charts are telling you, because that's all that matters. Now, often we'll use indicators like here, like MACD, to help us interpret what price is trying to say. But we only should be using these indicators when we can't read what price action is saying. Because ultimately, an indicator only indicates. It is the interpreter of what price is. And we have many ways to read this price chart before we go looking at our indicators. Because what happens with indicators is sometimes you don't see what price is trying to say, or you get so involved in your indicator that when you see the MACD crossover, you jump into trade because it's telling you it should be. It should be the other way around. When price action, price movement, and your charts are telling you to trade, maybe you want a confirmation of an indicator. Because remember, indicators only indicate. So what are the things we need to read price? Well, first we have to be able to tell the story of price. And we can do that by the first basic rule of thumb. And that's using our eyes. And the first thing when we use our eyes is we want to look and see if price is in a trend. Whether it's a long-term trend, a medium-term trend, or a short-term trend. We need to understand what price is doing in the short term, the long term, and now. Okay. How do we get that? We get that by our charts and our eyeballs. Then we want to, if you use trend lines, see if you can find and put a valid trend line on your charts. Now, maybe we can. Now, today's class is not about learning how to draw trend lines. We have many other classes in trend lines, and that's really a pretty fundamental piece of trading knowledge. But from there, we need to be able to start trying to figure out what price is telling us. So we're looking at our candlesticks, and remember, every candlestick tells us a story. They tell us who is in control of the market at present, and the combination of the preceding candles and the next candle can interpret what price is doing. Okay. So right now we can see, and this is a current Euro US dollar chart, and we're looking at a 1 hour chart. And we see a simple retracement here. And then we went into some indecision, because most likely what's going to happen is price is telling us that we should continue on in this uptrend. Okay. Supporting above the trend line. And we have this indecision after a very strong dip here. But that's not to make a trading decision. That's only telling you the basis of the story. Now, the most important thing you see on this chart is your lines of support and resistance, because that starts giving you barriers around price and telling you what price would be important as the charts moved up and down. So today we're going to focus, hold on a second, we're going to focus more or less on support and resistance, and then how to combine that together to make smart trading decisions. So there are many ways to find support and resistance. Now, I believe in eyeballing. Okay. And this is why I firmly believe in price action. And the reason I believe in eyeballing, because eyeballing is looking at your charts and finding price in the past or price levels in the past where prices either reacted or had a difficult time falling above or below. So first we have to identify what we would call support or resistance. Well, that's another thing I throw away. I don't really like to use exactly the term support and resistance because support can become resistance, resistance can become support, and you can get tied up in these terminologies. So I call them price levels. These are levels in the movement or the journey of price where price has gotten stuck. It's like, you know what? You know, when you're going home from work at 4 o'clock, and if you went home at 4 o'clock, you're going to get stuck at that that intersection, that intersection, that intersection, and maybe in front of the school. If you go home at 6 o'clock, you'll go right past it. If you're coming the other direction, you're coming from home to the mall instead of the mall to home, you won't get stopped because the traffic's lighter traffic. These are the journeys of an asset. Same thing. So these are the intersections or the price levels where price tends to hem and haw. So when we get to these price levels, we want to then see what price action is telling us. But how do we get to these levels? Because they're not just lines that we're just arbitrarily drawing on a chart. These lines have great importance to us. And there's many different types of support and resistance or price levels. Okay, we can get these from triangles. Okay. But again, that's trading a chart pattern, which I believe in. I trade price action, support and resistance chart patterns. That is my whole kit and caboodle for my trading. But support and resistance are areas where price found difficulty to cross upward in the past. So here we're looking at a historical chart, and you can see where each time prices mounted this level, and this is April, May, June, we're talking about a long term, each time it got to this level, now it can easily break through, but it had a problem at this level. So we knew the euro US dollar at 114 had difficulty, even though it could pop right through and it could go. So we could say it's the 114, 115 level that we have this price level. Okay. That tells us that there's something significant at that price point. So eyeballing is not difficult. It's only time consuming. And how do we do this? Okay. We need to go back and let's actually let's go over and do it on a chart. Let me pop up the charts. Now, what we're looking at is we're looking once again at my teaching chart, and it's the euro US dollar 1 hour chart. This chart is not here because I'm recommending anything on the euro. I use this chart for every class. Okay. Now, all of these lines you see, these horizontal lines you see, the dotted lines, the bold lines that go, these are levels of support and resistance that came from the past and they keep going on into the future. And every time price comes around this level, we can start to use those again. They just, because the only ones that are important to us are the support and resistance levels around the current price. Now, I color code mine. Let's get the MACD off of this chart here, down below. I color code mine because they mean something to me. My legend and my key is important. But if I were to go back on my charts, okay, we can see that these lines have come. Where did this line come from? Look how this red line held in all of this movement, okay, back at the beginning of this month. Look at how important this price was. But this level came from the last time we had price action on this asset, on the euro US dollar, when it was trading at that level. And each line you draw on here is just projected forward. Okay. The thickness of my lines, the narrowness of my lines, what I'm using, tells me how important that level was. How, because the more times that price touches that level, or the more times it's used in the past, and the more times it holds true, the more important that level is. The color codes also tell me how long ago or how long these lines have been on. Some of these levels have been on this chart for a year. But you get these by going back into the past and looking to see. I just want to get. Okay. So here again, we're looking at the euro US dollar. Okay. Now, I don't want to just look at, this is where price is at the moment, and this is important. Okay. This is important at this moment. Okay. Now, I could put it on my chart. Okay. Now, I, and a lot of traders, don't specify it's got to be the swing higher, the swing low, the open or the close. We're looking for where price has been important. Okay. It can either be a group of highs, it could be a group of lows, it could be a bunch of candles with the bodies or the opens and closes. Okay. And because it's a level, not an exact price, you don't have to draw it, and we don't have to have a rule of thumb that everything has to be there. Okay. Now, would that level help us? Nah, not in the short term. Okay. If we were to go back, and we might say somewhere here is a good level, but then I want to go back and see how important this level was the last time the euro, which was just the beginning of the month, how important that level was here. Look at this blue level, how many opens and closes we have right at this price level. We can see the price stalled right at that price. I want to go back farther. Okay, price has been below the 118 level for a long time. But look, the last time it surged up here, which was back in October, it couldn't reach that level. So that level had some validity. Let's go back farther. We're going to keep going back historically far. Because I don't know when the last time was the euro was at 118. Here we go. So in this climb, it didn't make there, but maybe we ought to see, because remember so right now we're just looking and seeing. We're not drawing because we're not confirming anything. We're not making any permanent lines on the chart. We're just going back to see how important this level is. Well, look at here. Look at all those highs that got stuck there. Look at all these bodies over top of there. Look at this one. Price surged up. It was not able to break it. Okay. Here again. Here again. So the last time price was in this range, these levels were very, very, very important. Okay. Now, granted, this sounds like a lot of work. I know. It's time consuming. But it isn't, because it only looks like a lot of work because this is the first time we're drawing them on this chart. But once you have them on the chart, they move forward and they hold forever. So once you get them on here, and the next time the euro comes down to this level, those levels, those charts, those lines become your significant lines again. So once through the moving of an asset, you have all that. And another way to do this is also to change. You can go back to a one-day chart and use that to also help you see historically what price has been important. But as you see here in one-day chart, We haven't even been at this level. Okay, let's go back to a 2-hour chart. Oh, where's my data stopped flowing here? Hmm. Well, now we got it all back again, but now we got to get rid of it all again. So let's go back over to my. So as you can see, all of these levels, because I've been using my Euro US dollar chart for a very long time, but it wasn't until recently when the Euro fell down to the 105, 106 level a while ago that we had to draw new lines and add those on because they were new prices that hadn't been reached in a very, very long time. So these levels will hold true all the way into the future. So you can see here on this chart, okay, where we actually took a short-term level, but this was on a 4-hour chart. So what you're looking at in this period, okay, is about 12 days of trading. And we could see and isolate a price that was important in this trading or price action time. So we could use this to predict what was going to happen in the short-term future. Okay, here we have a beautiful candle forming, and this is a current chart. And let me bold these a little bit for you so you can see. But these are the current levels of support and resistance for come on for the Swiss franc Japanese yen. Now look how interesting we had the candle formation with the base of the candle forming right on that level of support. We have the candle formation and the apex directly in the middle of these two important price levels, and price is still within the triangle, and we're expecting it to break out right below the resistance level or the price level here, and it would break down, or we would expect it to break out above this price level, which came from historical prices when this asset was trading at this level in the past. Okay, so let's go back to my PowerPoint. So remember, they are more like zones that can be breached and pushed into. The trend may pull the price action back out of it, or maybe price action will succeed in breaking it for good. This is why you want to think of these points or these lines as zones, not finite prices. So now we're going to look at how we could use this together to build a support and resistance trading strategy. So now I'm going to guide you through every step of the way. So follow along as we cover support and resistance trading. After you learn the strategy, you will be able to identify these sweet spots where price action happens. So our indicators for this strategy will be price action and its relationship to support and resistance or price levels. To be honest, this is, in my opinion, the best way to trade price levels. So exactly what are these key areas? How to trade these price levels. Before we explain the strategy, we're going to define support and resistance, which we've just done. Okay, you got it pretty much under your belt. So let's go. We've got our chart set up. We've got our levels straight on there. We've got our candlestick set up there. We're ready to look at these charts and maybe try to make some interpretation, apply some strategy, decide whether there's a buy or a sell opportunity. We want to use these to set our risk management, our stop loss, our entry points, our take target points. Okay. So the first step for the support and resistance zone strategy is the first step of the strategy is drawing those zones on our charts. This allows us to easily spot where the price would probably reverse. After you do this, it will resemble a support and resistance indicator, only you now have zones to take advantage of. Drawing zones on charts is better done on a higher time frame so that you can examine the main reversal levels and the more critical points on the chart as a higher time frame shows us the bigger picture. So for our type of trading, we would like to draw our support and resistance or our price levels using a 2-hour, a 4-hour, and a 1-hour chart possibly. We'd like to see where these zones are and where price action is happening at these levels. But we're not going to trade from a 1-hour chart. But see, we need to be able to see what price is telling us in a longer term picture. We don't want to get optic vision. We don't want to be so tuned in to the short term movement that we don't understand where price is at the moment. So I've gone back from 1-hour charts to 2-hour charts to 3-hour charts. Now we can really look at the current price movement. And what we have is a very nice uptrend, push, ease, and we're in the middle of recovering from a retracement. Okay. Absolutely beautiful. Okay. But we don't want to be myopic. So we might want to push back just to get a better perspective to a 4-hour chart and see exactly where this is. Because you wouldn't want to be in a reversal and you wouldn't want to be in the other side of a retracement that's coming off of a downtrend. So ultimately, we know now we're in the middle of a recovery of this uptrend. Okay. Price will most likely move up. We have our support and resistance zones above and below the current price. We have our trend, which we drew on the 1-hour chart, which we can extend forward. Even though it's not a validated trend line, we still have a trend and we still have a nice price action movement. And we've told the story of price. Okay. Because now, if we were to drop it into a much smaller time frame, a 30-minute frame, okay, we're starting to get more information. And then we would be trading in a 15-minute time frame, most likely. And we still get more information. Okay. Now, again, we still see in the short term, it's trading in a uptrend. It looks like, we might have some support at this level, but price should bounce back up into this zone here at the 118.64, 118.81. It's going to be supported by the 118.530 right here. Our longer term trend line, okay, again, isn't validated because we don't have 3 touches, but I haven't actually drawn a short-term time frame on here, a short-term trend line. But we might actually be able to get something that might have, let's get rid of this one altogether with, and let's put a new trend line on here. So we actually have, no, we still only have 2 realistic touches. But it's supporting price here. We have our support zone down below, our price resistance line above, and we're in a 15-minute chart pattern here. We could drop it down at this point into a 5-minute, which again is supporting some decision, but we haven't made any decisions yet. We haven't made any critical. We've made some general assumptions. We've gotten some interpretation of price. So let's go back to my PowerPoint again. So we now have our zones on our chart, and we took from the higher time frame to the shorter time frame, and we now left them in our 1-hour time frame. So when you're doing support and resistance trading, or price action rate, a line with multiple touches is far better off as it stood against the price and the past, the test of many times. It will continue to do so. Why? Because history always repeats itself. And this continues to happen time and time again on every chart that you ever look at. And it does. So make sure to leave spaces between your zones, as drawing many lines will confuse you and worsen your trading decision. This strategy could easily be compared to our red zone strategy that shows how to draw zones on your charts. When you take a look back after drawing zones, you will find that those lines withheld the price numerous times before and will continue again. So when you draw your zone, so to speak, okay, you could say this is a zone and color in, let me get my marker on here. This is where we drew the two lines earlier on the support and resistance zone. And we could call this a zone. Or like you saw on this chart, we drew our zone because you don't want a finite area. And you can do that by using two very tight prices. Or what you did is, we noticed before, we did that by finding the two candles that were a little above and below to find that range, and that encapsulated the prices between that, and we drew our two lines. And this gives us our, all right, technically, I don't do any of that, okay? I just take a shortcut. My shortcut is, this is my support level or my price level, and I mentally give myself 5 pips above and 5 pips below. And in there, because like I said, these are not finite numbers. You notice when we drew the lines across, we didn't go exactly to 118.61 and say every time it touched 118. We saw it touch 118.61, 118.60, 118.50. So that's our zone. So as long as you know in your head that you're giving a 10-point zone, 5 above and 5 below this level, then you're also just fine. Okay. But there are zones. So if you just don't think of them as finite prices, you're all right. Now, step 2 is, the second step is waiting for the price action to touch one of those zones. Now, what you can do is you can watch many charts at one time, many currencies, and wait for your chance. But this is the ultimate. It is, you can't just say, I'm going to trade this strategy today, and I'm going to look for it, and I'm going to find it, and I'm going to do it. No, you have many strategies in your toolbox. And when you see something happening, you pull out the strategy that fits that. So you could look at 2, 3, 4, 5 currencies, but and since you always have your support and resistance levels on your charts, until price action actually touches one of those levels, you don't have anything to do. So again, here, once price touches the levels, then we can start making some trading decisions. But until we get price action actually coming, it's just like watching a triangle. Until you get the breakout, you can just like watching dust, paint dry on the wall. So you have your support and resistance levels on lots of charts, and you're doing your thing. And whenever you get price coming near one of those levels, you can get ready to jump in action with this strategy. So basically, the higher time frame takes less time and attention than the smaller time frame. Alternatively, the smaller time frame has more signals, as the zones may get hit more frequently. You have more focus if you're trading small time frames. So now, if the price reverses, that will be good. So as price approaches one of those price levels, and as it reverses or bounces off of it, that's a good thing. On the other hand, if it breaks that level, it may really be breaking or fake breaking. Okay, if it breaks that level, we need it to see that it breaks it with conviction. But we're only concerned with those that come down to that level and look like they're going to bounce off, especially when they're a continuation pattern and they're in a retracement. So the third step of this trading strategy is to wait for the candle which hits that zone to close. This will indicate the signal candle we are waiting for. So we're looking for the candle to close at that zone. Again, we haven't made any decisions. We're just looking for a candle to close at that zone. So the question is it a bullish or bearish candle? Is it strong or is it weak? Is it bigger or small? Does it have long wicks or short wicks or no wicks at all? So we have to define that candle. Okay. Once we see the candle, which would have been this candle, close at this level, what we're looking for is the next candle to give us a bullish, it's bouncing up, signal. And we need a strong bullish candle. Okay. How do we define what a strong bullish candle is? It is a candle that encompasses that prior candle and exceeds it and could exceed the last two. It shows you the conviction of the traders. So we want a long body formed after the previous touched the level but could not break it, and entirely taken out the two previous candles. Because this strategy only works with this very specific set of rules. When you get these things, and button 1 pushes button 2 and button 2 pushes button 3, then you can jump into action. You can't just say, okay, it did this and we're going to get it. No, you use very strict rules. So when you get those trade setups, they are very probable to succeed. Okay. So if you get weak candles, you're going to have a weak trade, you're going to have a bad trade. So step 4 is, the fourth step is to identify where you will enter a trade. You want this to happen at the pivot point or the turning point. Your entry should be slightly above or below, depending on which way the price action was, the candle, which is a strong candle. This way, you're adding more confirmation to your trade to make sure that the price will move towards the direction you expect it to move. Our stop loss should be placed on the other side of the zone and is not too close to the level to give you some space. Putting the stop loss there makes sense because this is the end of the trade. The price is unlikely to reverse after that point. So let's review. The support and resistance zone strategy will enable you to take trades exactly at the area price will reverse. Our indicator for the strategy will be price action and its relationship to support and resistance or price levels. So we want to draw our price levels on our charts. We want to wait. And this is the waiting game. We want to wait till price touches the above or the below level. And we'll wait for the candle which hits that zone to close, and it will probably signal the candle we are waiting so that we look at that candle. We identify where to enter the trade, and then we should identify where to exit the trade, and then calculate our risk-reward ratio and determine if we can afford to make that trade. And then if we do, we jump into action. So that's a wrap for us today. So we've learned the support and resistance strategy. We learned how to draw these zones on our charts and how to trade them successful. We also learned how to determine the direction the price will probably move so that we can better edge in our trading. Trading support and resistance and discovering support and resistance zones are pivotal to your trading success. So again, thank you very much for joining us. If you have any questions, go to the Alvexo website, www.alvexo.com, and go over to their trading and education section, and there you'll find all the answers to your questions. or use the live chat button or the contact us, and somebody will be glad to give you the answers. So once again, thank you very much for joining us and have a great trading day.